AutoLine After Hours is brought to you by Bridgestone Tires, solutions for your journey.
Gary.
John, how are you?
I'm doing well. You ready to learn today?
I'm ready to learn every day that we're on this thing because we got people who know far more than I do.
And me, right.
And it's always a good thing to have them.
So tell them, we've got a veritable Library of Congress of information here sitting in Charlie Chesbrough from Cox Automotive, Senior Economist with Cox. And thanks for being back on the show.
Yeah, happy to be here. Thanks for having me.
It's been a while. And Mike Colias, who is with the Wall Street Journal, who probably knows more about the business of the auto industry than, well, maybe Charlie knows a little bit more.
Yeah,
I know how to ask a lot of questions. I'll be asking a lot of questions.
Bit more.
But you know how to ask the right questions. That's the key.
So Charlie, Cox did its review of Q1 2024. Give us the headlines.
Well, I think on the whole, it was a good month. The numbers came in yesterday, and we finished with about a 15.5 new vehicle SAR, 15.5 million, which was pretty much where expectations were at. And it's a little bit, the sales pace has been a little bit crazy in the first quarter. We started the first quarter in the low 15s, and in February it jumped to the high 15s, and then in March it finished right in the middle. So it's hard to get a real feel as to sort of where this market's headed right now. But it was up about 5 to 6% over what we had done in the first quarter last year. So we are headed on the right trajectory. The one little caveat with that, though, is that there was 2 extra selling days this year than there was in the first quarter last year.
Oh.
Both February and March had an extra day. So that's about 2-3% a day right there. So wait
a minute. So on a DSR, daily selling
we're basically
basis,
flat from where we finished last year. And if you look at the sales pace, we actually had a little bit faster sales pace in Q4 than what we had in the Q1. So the question we're kind of looking into as we go forward from here is, was that kind of an early indication that maybe the pace is slowing just a little bit as we head into the spring and summer, or is the SAR just kind of jumping around because maybe all of our adjustments are a little bit wacky in the post-COVID days right now?
Well, couldn't the Q4 23 sales boost be predicated on people saying, oh my goodness, we just had that strike, I better buy a car now?
Well, there's all that could be a contributing factor. We could have seen strong Q4 sales because a lot of people coming out to buy in the Christmas rush. There was quite a few deals out there that we hadn't seen in a long time at Christmas time. A couple of the luxury brands did quite well. A lot of explanations what it could have possibly been. But my sense is, in general, it was just maybe the market taking a little bit of a step back from where we finished the year last year, kind of on a crescendo. And we're just starting a little bit of a slower pace this year. But
or if there's all these deals that were in Q4, it pulls sales forward that are not happening right now.
It may be happening. And that's one of the things we're wrestling with. For consumers out there, there's not a lot of reason to go out and buy a vehicle today. Because if I wait till tomorrow, I'll probably get a better price. I'll probably have more inventory to choose from. Incentives are constantly going a little bit higher, it seems like, in the market today. So for many consumers, the urgency of, I needed to go out and buy because inventory was lean, and if I didn't get out there and get it, someone else was going to grab that vehicle. Well, that's not the market today. Now it is if I wait, it's a very good chance that price might come down a little bit. And so there's just not a lot of urgency out there for consumers to go vehicle shopping right now.
It sounds like what you're saying is that the pent-up demand that we've seen over the last 3 or 4 years in the pandemic era has largely evaporated. I mean, at one point, I remember some stat like there was 5 million people who were just kind of needed a car and couldn't get one or weren't willing to go into the market. And I thought I heard one of the OEMs in the last few days say that that's kind of evaporated.
I think so. I mean, if you needed a car 2-3 years ago, you can only wait so long. And then if you can't get a new car, you're going to go into the used market and get a vehicle there. And we do know that during the lean times on the new vehicle side, a whole bunch of folks were pushed into the used vehicle market because they did need transportation. So it does seem, one area that you might say that there is possibly some pent-up demand is with fleet customers, maybe in the rental car and some of the commercial fleet. But even then, we just got the March numbers, and fleet was essentially flat or down just a hair in some of the early numbers we had so far. So we're not seeing a whole bunch of fleet growth this year thus far either.
Different segments did better than others and vice versa. But the one that jumped out at me was full-size pickups. Ford did not have a good pickup month, full size F series. Neither did Ram, but GM seemed to do okay, and Toyota had a pretty good month.
Yeah, they held up okay. The full-size pickup segment's really been kind of on the decline the last couple of years. It had a big surge in 2020, sort of in the immediate post-COVID days. A lot of folks went out and bought pickup trucks. They had some crazy 0 for 72 and I think some 0 for 84 offers sort of in in April and May, sort of after COVID first hit. And we saw truck share go quite high. But since then, since 2020, it's just been dropping every year. In part because of the supply shortage issues that we had back in 2021. And now I just think these high prices, as well as the housing slump that we're dealing with from these high interest rates, have just kind of chased away, folks being able to afford these pickup trucks. And with the housing crunch that we've got now, there's just not a lot of demand right there from contractors to buy these vehicles.
But are they going into midsize? Because, I look at the new Ranger, terrific truck, although it's not there in volume yet. They're still suffering from the UAW strike.
Yep.
The new Toyota Tacoma, fantastic truck. GM has redone the Colorado and Canyon. Are the full-size buyers migrating to midsize?
The data suggests that they are. Now, I had them talk to individual buyers to say, you were going to buy a full-size and you buy mid. I can't tell you that. But when we look at the data, you can see full-size shares going down like this, and you can see small and mid-size pickup going like that. And in fact, small and mid-size has risen to be the ninth largest vehicle segment now. It's doubled almost from about 2% to about 4% of the market. But it's really kind of a phenomenon we've seen across the board against all product segments. When you look at utilities, mid-size utilities are going down, subcompact and subcompact shares are rising. You look at cars, even compact cars, even though all cars are going down the last decade, compact car share has actually been rising a little bit, even though mid-size car is essentially flat. So we are seeing sort of the shift to small, and I think it's just consumers trying to look for affordability. They need the functionality.
It's not small. They're looking for smaller price, not
the
a smaller
price,
vehicle
yeah.
necessarily.
But and so they're ending up in a smaller size vehicle, and I think that's one of the issues that when we look at some of the manufacturers, like Ram in particular, Stellantis, they don't have a pickup truck in that sort of Maverick category. Maverick's been selling like crazy. I think their numbers were up 90%, I think, year over year.
Crazy numbers, right?
They can't make enough of these things. And GM and Stellantis don't have a competing product, and it appears that that's what consumers want, that good fuel economy, small pickup truck, and there's not much competition out there for that.
Maverick up 82%.
82%. Yeah.
What was the number, Gary?
82%.
No. I mean, the number of vehicles sold.
Where did it go?
Was it like 20,000 or closer to 20?
No, Maverick is 39,000.
39,000.
The majority of those are probably hybrids. At least that's historically what Maverick has done, more hybrids than not. Mm-hmm. So I think they're really hitting on the hybrid theme there. Just one more on full-size truck, just because it's so important to the bottom lines, right? Is it settling out? I think I saw it's about 13% of share of the market, like you said, had gone down each of the last several. Do you think it sort of settles out at a pre-pandemic level at that point, and that was just kind of a pandemic housing market spike, or do you think there's something structural going on there?
Well, I don't know. I mean, it seems to me it's going to be hard to see pickup share really come roaring back until we see the housing market come roaring back and more activity from that sector. But as I said, we've made such a big move on these prices on these pickup trucks the last couple of years. The average market price sort of pre-COVID to where we are today is about a 25% increase. But, some of these brands like, Jeep and Ram, they're looking at 40-45% as the average monthly payment increase that they're now offering to their customers. I think some of these pickup trucks just got out of the range of a lot of that customer base that's looking for that product. So I think they're going to have to start thinking about a smaller price point, smaller size vehicle in order to tap into that buyer.
So, it's interesting that, you were mentioning the compact SUV is up, the midsize SUV is down. And it's interesting that, you have this increase of like 18% and this decline of 16%. So it's like almost as though one is looking like they're standing in the dealership going, no, not that one. I'm going to get that one. Yeah. And, and you have the, subcompact SUV is up by 8%, but compact car is up 7%. I mean, small numbers, but still significant sorts of things. So is this a price issue as it is with the trucks? I mean, just across the board that consumers are facing a squeeze, or they're coming to a realization like, I can't afford to spend this much money each and every month on that thing in the driveway.
Or they're unwilling to spend that kind of money. But yeah, I think consumers are in a little bit of a revolt that they don't have a lot of choices these days. If they still need that functionality, they just have to go for a vehicle that's more into their price point. And I think that's why we're seeing some of the brands like Buick actually had a pretty good quarter. You know, this sort of affordable luxury position that they've kind of put themselves in might be a good sweet spot in the market right now, as people are looking for they want the best, of course, everybody wants the best, but they're looking to make wise financial choices, and that might be leading them to where Buick's at right now.
Interesting.
Yeah, I was going to say on a subcompact, I mean, you can criticize GM for a lot of things right now, but affordable cars isn't one of them. They're actually trying on that front, unlike a lot of the other brands. I mean, they've got the Buick Envista, which is really a great value.
Trax had a great quarter.
The Chevy Trax, Trailblazer. I mean, a lot of stuff under 30,000. GM has, I think, sort of made it a strategic point to say we're not going to abandon that entry level buyer, and maybe they picked the right time to do that with interest rates being as high as they've been.
Yeah, and if you look at this year in particular, like Jeep has got the Cherokees kind of dying off as they're waiting for the new one to come in. Some of their other entry products are getting a little bit old at this point. And Ford has kind of gotten, they've kind of abandoned any kind of the lower price points at this point. So I think GM's kind of got a little bit of a sweet spot for themselves in going after that low end part of the market.
Some of your numbers that stun me, Stellantis. You guys have said the Hyundai Group, including Kia, Genesis, will outsell it or did outsell it. I think.
Yeah. The question is whether Honda's going to.
And is Honda going to outsell Stellantis? And what the hell is going wrong at Stellantis?
I mean, the way they had great growth. It's a little bit misleading, some of these numbers, because Honda and Toyota last year were in a really tough spot. They had no product. Honda came back a little bit before Toyota did, so. The numbers are going to be kind of weird this year when we look at some of the year-over-year changes. But a year ago right now, those two brands, Honda and Toyota, had very, very little product availability. They got a lot more now, and they're taking back a lot of the market share that they had lost before. And we're seeing that one of the big brands that's suffering from that is Hyundai and Kia. I mean, both of them, they had a great year last year, but we're seeing their sales are starting to stagnate a little bit, which seems due probably in large part because Honda and Toyota are back.
Yeah, I mean, huge. 21.5% year-over-year increase for Toyota, 21.5%, and Honda they're at 16.4% over last year.
But again, they had terrible first quarters last year, especially Honda. So Hyundai was down a little bit, but not much. But the fact that they're now number 3 in the U.S. market, the group, that shocked me.
Four,
yeah, I think they're 4.
GM, Toyota, Ford.
Yeah. Oh yeah, correct.
Yeah.
Excuse me, number 4. But still,
Dearborn, their ears are burning.
They're burning up right now.
It is surprising. It's been quick.
I mean,
but Stellantis may be number 6 if Honda outsells it.
And I think maybe by the end of the year we may be there if the current pace kind of goes, unless all of a sudden, these Ram trucks start to catch fire.
Well, they got a new model. Just
coming.
about coming out right now, so that could help.
That could help, but they got a lot of ground to cover.
It's not for a lack of inventory, though. I mean, last I checked, Stellantis has, more inventory than anybody. Most of them.
They got a lot of inventory.
Yeah. And your day supply, the one that has the greatest day supply is Dodge with 155 day supply, and then there's Ram, then there's Jeep. And I mean, it's just like, and you've got 73 days is the average for the industry.
But did Dodge build up a huge bank of Chargers and Challengers, knowing that they're going away, for a year at least? The electric one's coming out, so I just wonder if they built up a big bank to go, hey, man, we got to have something for our dealers to sell, because this electric Charger, I don't know.
Yeah. I tell you, when you look at Stellantis' Q1 numbers, I think the one that really jumped out at me is that their most successful brand in the first quarter in terms of year-over-year growth was Fiat.
Yeah, but they sold like 150 cars over 3 months. Forget
growth.
about it.
I mean, you got to take your wins where you can get them. And 12% growth, you got to be happy with that.
What's that? I mean, they're not even selling 2 a day.
No, I think that's a big question that Stellantis has to start thinking about. I mean, is it time to start shutting down some of these brands like Fiat, like Alfa? Do we need to sort of concentrate?
But you know how expensive it is to shut down a brand? Know how you shut down a brand? And I think this is what you're doing. Just let it die.
Yeah. And well, maybe that's what they're doing.
So how many vehicles need to be sold for something to be profitable?
Oh gosh, I don't know the answer to that. I mean, I think there's all kinds of stuff that goes into that, but I would assume most vehicles need probably at least I would think 20 to 30,000 to even be considered functional. That you would even make it worthwhile.
Mm-hmm.
But I think for every manufacturer, it's going to vary on their own.
It's going to depend on the price point, where the vehicle is and all that sort of thing. But look, I mean, to tool up a plant, I think you got to have close to 250,000 a year out of a plant. And if you're a dealership, imagine being a Fiat dealer. I don't know how many dealers they've got in the U.S., but you're selling 150.
Probably more than they need.
Well, for sure. Look, I mean, if you do the numbers, they're selling less than 2 a day. That's over how many dealers? How do you survive well, you have multiple franchises, right?
Yeah.
Not just a Fiat one. But how do you keep that going at less than 2 cars a day nationwide, spread out over how many dealers?
Well, and the market today should be a favorable market to a Fiat brand. People are looking for smaller SUV type vehicles, and that's kind of what they make. But yeah, it's a no-go so far.
Charlie, is it too early to answer the question of whether or not the car companies are going to keep their promise to not, stuff the dealer lots, go back to the days of 100-day supply of vehicles like they said they would do when they hit the vehicle shortage after the pandemic and everyone was making money, the dealers, the OEMs, they swore they wouldn't go back. And I'm wondering, I saw some of the inventory levels seemed like they were getting back to pre-pandemic days. Is it too early to answer that question, which every dealer has pushed back on? They all assume that they're going to go right back to what they did before because they're going to be chasing market share. Where are you seeing that in terms of when you saw the first quarter numbers?
I have to say, when COVID came and we saw the inventory levels fall and negotiating go out the window and that the MSRP was the price, take it or leave it, I thought, wow, the industry's finally figured it out. We finally have this whole thing and we're never going to go back. And boy, as soon as COVID kind of passed, we're right back to where we were before. We're looking at total inventory levels now as we measure it of just under about 3 million right now. And it was about 3 to 3.5 million was sort of the pre-COVID levels. So we're, as an industry, we're essentially back to that.
So it sounds like
and we're seeing incentives too are back as well. So
in the next 6 months should tell it. I mean, 3 million's a little below what it used to be. So if it goes up another 500,000, maybe we're right back to where we were.
We're heading back to where we were. But that's in the aggregate. If you look at some of the different brands, there's a very, as I said in our comments last week, there's a very wide position out there for the way the brands are at. The Stellantis brands are looking at massive days of supply. They're having to get very aggressive with their incentives. Hyundai brands are starting to see some of their inventories rise. I don't have the March data yet, but in February, they had the largest year-over-year change in their level of incentives of any other brand out there. So they're having to kind of up the money on the hood themselves. But you've got Honda and Toyota still in an incredibly tight inventory situation where although their days of supply is rising, I mean, they're coming in and going out. It's not like anything's building there.
But that's how they've always operated.
They've always
on low inventory.
And they seem to be doing it, even now, they seem to be doing it well, even with their inventory.
Subaru is up, though, and Subaru has historically been one of the lowest.
Yeah, Subaru's starting to go up a little bit. Nissan is back towards 100 days of supply themselves.
No surprise with Nissan.
They're returning to the old days. So right now we're in a situation where part of the industry is dealing with very high levels of inventory, and they're having to get very aggressive with their pricing. And you got a whole nother section of the industry that's still looking pretty good. Profits are strong, and they're in a situation of, do I have to respond to these discounts that my competitor is offering out there, or can I sit tight and not get aggressive with incentives? And that's the battle that we're going to look at all year, I think.
So you guys have Toyota at 35-day supply, the least amount of vehicles sitting there. So someone's going to go in and look at a Camry and say, that's the price. But then they're going to go down the street and look in a Accord and say, that's the price. But then they're going to go to a Chevy dealer and see the Malibu and say, wow, that's a hell of a deal.
Well, that's generally how it's always been that way. But yeah, I think that's what you're looking at. You're going to see very aggressive incentives from the Detroit 3 and a lot of the Asian manufacturers sitting pretty tight.
You guys seem to be more bullish on later in the year, too. In fact, I think your dealer survey said that they think the second quarter is going to be a whole lot better than the first. Any new revelations for us in that regard?
Well, one, I think they're just optimistic, right? Hope springs eternal. So our dealers are concerned about the way things are today, but they do think 3 months from now things are going to be a little bit better. I think in general, there's a lot of kind of talk that the Fed is going to start lowering rates at some point this year, whether it's June we start the rate cuts or later in the year. I think a lot of folks think, well, there's 2 or 3 that are going to be coming. All of that will help, the interest rates out there and this affordability issue we're dealing with. So I think that's kind of permeated some of the dealership thinking as well, that the next half of the year should be a little bit better, a little bit freer money than what we're dealing with right now. But I will say, I think that things could be, it's going to be a slow growth path till we get there. And as I said, we saw today that the fleet numbers showed were essentially flat on a year-over-year basis. Retail was up a little bit, so that was a positive indication. But I think the growth rates, now that we've had sort of the recovery from the depths of where we were at, the inventory's all recovered now, we're sort of back to normal, more or less. It's going to be a lot harder to get those sales from here. The growth rates are going to be a lot more constrained than what they've been the last couple of years.
But there will be growth.
Our expectation is growth. We're saying a little bit. We expect just a little bit better sales this year than what we had last year.
But what you've said so far on a daily selling rate basis, we're flat versus last year.
We're basically flat.
And a 15.5 SAR is okay, but I thought we'd be doing better.
I think it's okay, but given what the historical run-up we've seen in interest rates, I think the industry should be pretty pleased that we absorbed all of this, the shocks that we've been through the last couple of years, and then to throw the Fed's monetary policy tightening over the last 2 years. The fact that sales have still recovered in that environment, I think, is something to at least be pleased with. I wish it could be better, but I'll take any growth that we can get it when you've had this kind of increase in interest rates that we've had.
Well, let's talk electric cars and hybrids and plug-in hybrids, because that seems to be one of the bright spots in the industry right now. What are some of your thoughts on that?
Well, we saw in the first quarter that hybrids were selling like hotcakes. I think I saw in Toyota's report, 50% of their RAV4s are hybrids. 50% of Honda's CRVs are now hybrids.
In fact, Toyota total sales, if I got it right, something like 36%.
36%, yeah,
so
over a third.
Over 1 out of 3 Toyotas goes out the door as a hybrid.
And I think it was low 20s a year ago, so it's made a massive shift for them. And the industry right now, you have some brands. A lot of people are interested in these hybrids. Consumers are looking for these things. They're looking for ways to insulate themselves from volatile gasoline prices. Some manufacturers are well positioned to take advantage of that, like a Honda, like a Toyota. Some manufacturers are not. You've got Subaru out there. They don't have any hybrids out there, and they just started with an EV that's not getting much attention at all. So they've got a long way to go. The 20% of the market, they don't really have much to compete at. Mazda really didn't have anything to offer. Now they're going to have some plug-in hybrids coming to the market here pretty soon, but they've been kind of slow to the game. So some brands are going to have a lot of product out there. Toyota's got electrics, they got hybrids. Honda's got hybrids. Some brands don't have that variety, and I think we're going to find that consumers are going to penalize them for that over the next couple of years.
EV sales. You guys are predicting 1.7 million EVs to be sold this year. That would be a 54% increase. I mean, that's really healthy. And it's more bullish than others that, Mary Barr, I think, has talked about 1.6 million. I think Warren Brown was talking about almost 1.6. So if you guys at 1.7, you're pretty bullish on electrics.
Yeah, we're still we still think there's a lot of growth over the near term, that, there's a whole bunch of new product that's getting introduced to the market. There's still interest from consumers out there. It may be a little bit high. I'm a little suspect on whether we're going to hit that number, given sort of all the crazy news around EVs the last few weeks. But there is a lot of product that's coming to market, and certainly the electric Blazer, I think, could be a big winner. And I wouldn't rule out Tesla just yet. I mean, they've had a tough run so far, but they still have a good product. They still have a lot of pricing control that they could still manipulate price quite a bit. They've got the new Cybertruck coming out. We haven't seen big volumes from it, but it still could help boost it. So we do see that there is still some upside potential for EVs. But I will say, I think there may be more competition coming from hybrids than maybe what we thought originally, and we may see hybrid share take some of those EV sales this year.
And what do you think? Plug-in hybrids?
Well, they're about almost 2% of the market right now. And what's interesting is the big leader of plug-in hybrids is Stellantis, of all companies. They've kind of made a little niche for themselves in the market. I think there's certainly upside potential with those. As I said, Mazda's got a couple of plug-in hybrids coming to market. So I think there is going to be upside to that, but I don't know. I mean, it seems like if you're doing a hybrid, I don't know that plug-in makes as much sense as just going with the self-charging version of it.
So Mike, does your reporting show any sense of why people are going to hybrids?
Yeah, we did a story a few weeks ago on this, and it was a big question. Like, these things have been around for a long time, right? So why are they taking off? And I think the two things we landed on, one, I think the buzz around EVs has gotten a lot of, like, you've got some EV curious buyers out there who do the research and then kind of come, get up to the edge of the cliff and decide they can't take the leap. But here's this hybrid or even a plug-in in the showroom. I think that's been a factor. I also think that a lot of companies have just quietly, methodically been adding hybrids to their lineup over time, haven't gotten the big Super Bowl commercials, around them, but they're there. And like a Toyota, I think there's a hybrid version of almost every nameplate in the showroom. And so it's just gotten easier for a consumer to say, there's no stigma to it anymore either, right? Like 20 years ago, if you drove a Prius, it's like, it was like sort of a nerdmobile, and now it's just another option. And by the way, you can get better power out of it. You save 30 or 40% on gas. So it's just, I think, a confluence of things that have just led buyers to decide that buying a hybrid is not that big a deal. It's not a big departure from what they're used to.
I was just going to, if I could just add, one other thing I think, and I agree with that, and one other thing I think that's going on behind the scenes that doesn't get enough attention is that gasoline prices rose significantly in the post-COVID market. And in fact, from April of 2020 until June of 2022, gasoline prices rose $3.25 a gallon in this country. And if you look at any kind of consumer sentiment indexes from like University of Michigan or Conference Board, June of 2022, consumer confidence was the lowest it's ever been in measured history. Everybody, worse than 9/11 attacks, everyone thought things was terrible. And that was the month that gasoline hit $5.05 a gallon across the country. And I think that sent shockwaves in people that, every dollar move in gasoline is about $50 a month to the average car driver. So when you add in $150 a month to my fuel costs, now it wasn't for a long period of time, it was only for a few weeks, but it still remains elevated. But I do think it kind of woke up consumers that I'm still vulnerable to gasoline prices. And as crazy as I think people look at how crazy is the world today and the fighting in the Middle East, how crazy is it to think that gasoline prices could zoom up back again? Don't I want to try and insulate myself from that? And I do think that's part of the reason hybrids are getting as much attention as they are.
But one thing that Mike raised that I agree with too is all the early hybrids, they look different.
Yeah.
They were designed differently, different grills, everything to really stand out so the people buying them could show everybody else they were doing their part to save the planet. Now it's just a little badge maybe that says hybrid, and so you can buy one, to your point, and just blend in with everyone else. You don't have to stand out and say, look at me, I'm driving a hybrid.
Yep.
Yeah, I think the hybrid story, both plug-in and regular hybrids, has legs for sure. Because I think the car companies are going to look at this and, they've already acknowledged that the EV thing is taking off more slowly than expected. None of them are walking away, but they're delaying plans. And I just think they see now that this bridge is necessary. And, there were some companies that said, like, why would I do a plug-in? Why would I put essentially two power plants under one hood? Well, the answer we've learned is because the consumer wants it, right? I mean, people don't want the uncertainty, many people, of just an EV where you've got to find a place to plug in. I just think that the strategic pivot is on toward hybrid.
Yeah, our old friend Bob Lutz was the guy who was first and foremost against the two powertrains as being a solution. And what I find to be very funny is, we're mentioning the success that Toyota's having. So its electrified vehicles in the first quarter, which is roughly 207,000 units, is greater than the number of all of the Buicks, all of the Cadillacs, and all of the GMC vehicles sold in the first quarter. So clearly that's showing that, consumers are voting with their wallets.
But they are. Hey, let's take a quick commercial break right now. We got a lot of other things that we can be talking about, but a great shout out to our sponsor, Bridgestone. And by the way, if you like this kind of conversation, watching it, why don't you subscribe? Subscribe to our Out of Line newsletter or to our YouTube channel. Thanks.
When the elements are working against you, Being confident in your grip on the road is what really matters. Bridgestone Alenza tires, improved acceleration in wet conditions.
All right, we're back talking all things automotive here. A big story broke today, Mike. I'm sure you guys are all over it. Ford is delaying several key electric vehicles.
Yeah, and the three-row crossover, which we all assumed would be some sort of Explorer type fully electric vehicle, they've kind of signaled that they were going to do this. They pushed it back a couple of years. I think on the one hand, it's not surprising because Jim Farley's been very upfront about the fact that we've got to let the consumer catch up to this, and the demand's not there, and we've got to like use our capital wisely. On the other hand, you know, if you try to figure out what's going to drive EV adoption, Charlie mentioned all the models coming out. I mean, you've got to be in more, you know, for as long as we've talked about EVs, there's almost nothing in three-row SUV, right? And that's one of the biggest, one of the most lucrative segments. I think EV9, Rivian, I can't think of many more. You know, you'd think a family hauler EV would be something that you'd want to get in the market. So, I mean, these companies are up against really tough calls to figure out where they put their capital and whether or not they're going to get too far ahead of the consumer. And it looks like in this case, Ford thought that was few years too early. But you're kind of ceding that head start now to Rivian, to Kia. You know, that's an important segment. And
they are postponing their new electric pickup truck in Tennessee by a year.
Yeah. And that's obviously, you know, that's the franchise for Ford. And Jim Farley's talked about that a ton, about how innovative that product's going to be. I think that one, you know, we've seen the market for electric pickups maybe hasn't been what people thought. People realize the shortcomings that still exist for, you know, battery powered to try to tow things, and, you know, the infrastructure where you need it, you know, a lot of times in rural areas isn't going to be there. So, I mean, that one makes a little more sense to me. Like, you can kind of take a wait and see on that. Again, you're going to have Cybertruck out there, and that's kind of seeding that, but I don't really see them as direct competitors necessarily. So that one makes a little more sense to me, that they might want to wait and see what happens.
Do you think some of this has to do with Ford saying, hey, we've got to start generating more profits, and if we have diversions into EVs, that's taking away from selling more ICE vehicles, and that's going to make us more money than selling these EVs?
I mean, I think that's part of the calculus. And I think Ford's looking at this like they could be in a really good spot here, because they're one of the few that were sort of had chips on in every, you know, they did back off of hybrids a little bit during all the EV hype, but they never walked away from them. And they still have that sort of heritage to lean on. They've got some really good hybrid products. The Maverick's been a hit. You know, they've got the F-150. Then they've been out there with the straight EV products. They got the Lightning in market. They made a name for themselves for battery powered pickups. The Mach-E's been a relative success. You know, it's obviously hit pricing problems. And then they've obviously got the franchise of F-150 in internal combustion. So I think they're the kind of company, if they play it right, they could kind of be able to toggle between these powertrain technologies over the next decade and meet the consumer where they are. Now they've got to fix a lot of other things, like be able to launch some of these products without problems and that sort of thing. But they could be pretty well positioned. And I think that's what you're seeing is they're trying to figure out where that sweet spot is and what the consumer wants. And hybrid, I mean, part of that announcement today was they're going to have a hybrid version of every nameplate, I believe, by 2030. So that shows you kind of where they're leaning in right now.
Mm-hmm. And another big piece of news that broke today, BYD getting into the pickup segment. Did you see that, Charlie?
I missed that one.
They are. It's an electric truck. I don't think PHEV. Oh, it's a PHEV. Yeah. Oh, that's right. So, I mean, and they're not just for China. They're going into two other big pickup markets. Well, I should say big, but strong pickup segment, Australia and South Africa. So, I mean, I think anybody in the mid-size pickup segment had a heart attack when they saw that news.
Yeah, that's all I need.
Charlie, but you know, this gets back to this question of, you know, you guys seeing full-size pickups going down.
Their share going down,
right? And they've been so very important to the Detroit companies. How does this work itself out? I mean, do they, you know, one of the things that you guys showed is that, you know, the average transaction price is $47,000, And, back in 2019, it was like on the order of 37 grand. And so it's like a 27% increase, even more than that gasoline you're talking about. How do the companies deal with perhaps, fewer platinum editions and more work truck editions?
Well, I mean, clearly profitability is going to suffer. We see that from our dealers quite a bit. That in early 2022 and 2023, the profitability was great. Incentives were low, inventories were lean. There wasn't much negotiation.
They were charging over MSRP.
People charging over, all of that was going on, but that's all gone. We're going back to the way things were before. I think for the manufacturers, it's the same story that their profitability, clearly they're not going to make the same kind of profits they did, having to get much more aggressive on the incentives that they are now. But I do think that when we look at the pickup truck segment, the full size pickup, I think it's going to have challenging prospects over the near term of looking at any kind of significant growth. Not everybody, lots of folks still need pickup trucks. They just can't afford these $60,000, $70,000, $80,000 pickup trucks. And so I think the manufacturers that can come to market with the Mavericks, BYD coming to the market with something affordable, they're going to grab a whole bunch of market share. And I think Ram in particular ought to think about getting a low price pickup truck out there so that they can start competing with that lower end.
I think they already are thinking about that. I mean, there's been rumors in the press about them doing something, and it's not just what Auburn Hills can make, right? They've got small pickup out of Brazil that they could tap potentially. I think they sell it in Mexico as well.
Yeah, I'm surprised they're taking so long. I mean, it's the markets today.
On the profitability point, though, I feel like pricing has held up better than a lot of people thought. I mean, 2021, 22, obviously pricing was off the charts and people were paying, more than they ever had. But it hasn't come down the way that, I think Wall Street was expecting it to just drop like a rock, kind of back to pre-pandemic days. I think GM CFO a week or two ago said that, they had baked in 2.5% price drop this year. They've not seen that yet. They said the same thing last year. It was more resilient than they expected. So I think American consumers, even with the interest rates being as high as they are, have shown this kind of resiliency to say, like, all right, if it's 48 grand, 50 grand, we just haven't seen that deterioration. Is that what you're seeing in the numbers?
No, I think that's right. I mean, people are still out there. I myself went out and bought a new Ford Explorer, and I thought, oh my God, these things are crazy expensive, but that's just what the price of these things are nowadays. There's no escaping it. You can get away with a couple thousand here or there, but these things are expensive. I think one of the big things we're seeing with pricing is that the product mix has gotten a little bit more lower cost. As I said, there's a big shift towards the smaller size of vehicles, so that's lowering it. And I think one of the underlying stories of why we saw vehicle prices rising so much over the last couple of years and getting all this media attention was really the rise of Tesla and Model 3 and Model Y, which had average price points above sort of the national average. So as they were quickly getting to 4% plus market share, that was sort of driving up the average price out there as well, because those Model Ys were selling like hotcakes and taking up the average with it. And but I think as we look at the market today, prices are down about 2% year over year. We're down about 5% from our peak in December of 2022, and we hit almost $50,000. But we're not getting back to $37,000 anytime soon. So we're looking at these high prices going forward.
Well, let's talk Tesla more, because that was then. Today, they just reported first quarter sales that were below what they were a year ago. We haven't seen that kind of a drop in quite a while. The stock price took a pounding, although I was looking at it today, it had a nice little jump to it. But what do you make of what's going on at Tesla?
Well, there's a lot of stuff going on with the leadership of Tesla and all that. I won't even touch on that. I think in terms of what's going on with the product itself, it's a little long in the tooth. Tesla was a big story a couple of years ago. The Model Y has been around for a while. It's a great vehicle, but you get inside of it, it's pretty sparse, and there's some real competition out there now. Some of these electric vehicles coming out, which have all the bells and whistles and look fantastic. If I'm spending the same amount of money, I might want to get one of these other vehicles as opposed to kind of a stripped down minimalist Model Y. And so I just think they're in the Model 3. I know they just had a refresh of that, but it's still a pretty small, nondescript,
very minor
car.
refresh.
There's just not a lot to it. So I just think they're a bit of a victim of their own success. They had a great run up. great success, and now they're no longer the new guy in the block, and they have to sort of defend market share now, and it's a different position for them than they've been in before.
You know, Elon kind of reminds me of Henry Ford in the regard that he stuck too long with the Model T. And by the time they got around to doing the Model A, it was too late. GM had surpassed them, and they never got that leadership back.
Yeah.
I just think that cost consciousness that's in the DNA of Tesla, because they were a startup company for a long time, and when they're sort of on their deathbed of the production hell and everything, you know, every gram of weight and cost had to earn its way into the car, right? And so you couldn't do multiple model year changeovers and have 5 different nameplates. And so they just sort of stuck with that, even with all the success they've had. And I do think that narrow lineup is now hurting them. But, you know, as expensive as the cost of the battery is, I mean, you've seen Ford's EV strategy has been largely, you know, we can't be in every segment. We can't have model year changeovers, and we've got to pick our battles on this. GM's been a little more like historically, you know, they want to serve the whole market. So they've got a lot of top hats coming. But I just think, you know, the 3-row SUV, do you think that if Elon could have a do-over on the Cybertruck, he might say, why not just a really, you know, well-executed 3-row family EV? I just think that would hit a sweet spot in the market, unlike the Cybertruck's.
So something with volume.
Yeah. Well, I mean, that's what he needs, right?
And I think you're right. And I personally think it would be relatively easy to do a 3-row SUV off the Cybertruck.
Yeah, right. Yeah. And I don't know if maybe that's in the plan. We haven't heard anything about that. I think the next car, as you mentioned, is a $25,000 small car, which also is a volume play, but that's going to be tough.
So tough to make money off of, or just tough to create?
Well, yeah. I mean, you know, I think that's where he's talked about the Mexico plant. And we haven't, last he's talked about that, it wasn't really, it didn't sound like a real active plan. I think that's the plan, is either there, or I don't know if Berlin could do a small car like that. But yeah, I mean, it's going to be a lower margin product. Whereas I feel like a 3-row big SUV family hauler in the US, you know, you got more price ceiling to play with there. So
I do think, though, as I just say real quick, as we're talking about EVs, I do feel like a narrative has been lost over the last couple of years, which is, why buy an EV? Like, what is the argument that you can give to a consumer is to choose this product? And it seemed like it was always, well, you're going to save a ton of money on fuel economy. You know, it's cheaper to charge your vehicle than it is to fill it up with gasoline. Is that the case? Like, I don't even know if that's true, and I'm an auto analyst, right? I study these things. I don't even clearly know, what does it cost to, you know, how much am I going to save fuel if I get this EV versus buying a gas version of it? I don't think any of those questions are clearly answered, even in the industry today. So it's hard. I don't know how they make the case to a consumer buying an electric vehicle when you know you're buying all kinds of risk regarding, you know, the battery and depreciation and charging and all these issues. What's the compelling argument for, if it's not, you're going to save money on gasoline? I mean, is it 0 to 60 in 2 seconds? I mean, some people care about that. I think a lot of drivers don't. Other than that, I think the industry's kind of lost sight of, why are they going to get consumers into these things? If it's not to save money, what is it?
I just talked to a political consultant yesterday who's done a bunch of polling on all this stuff. And he said the number one reason to get people into EVs is you sell them, you never go to a gas station again. A lot of people, particularly women, do not like going to gas stations. That's extremely appealing to them. Also, if you can charge at home, boy, that's really appealing. You know, charge your vehicle overnight while you sleep. That's really good. The acceleration, yeah, that appeals to gearheads like me, enthusiasts, but not necessarily to the general publication or to the general public. And you know, smoother, quieter, that's all appealing too. But the biggest thing is, you never go to a gas station again.
Yeah.
Well, but you go to a charging station.
Right.
So it's the same idea.
Overnight.
I think it's really more but I think the selling point is, so you can think of all the money you can save on gasoline because you don't have to ever go to a gas station again. I'm just like, I don't think the industry's communicated what those savings are.
That's right.
So Mike, to what extent, when you talk to executives at the OEMs, are they saying that basically we're doing this because we need the regulatory credits that come with EVs in order to sustain our business?
Yeah, I mean, I think that's always been one big factor, and they've been upfront about that. But at some point, it turned from these compliance cars, you know, a Chevy Spark, it would get 100 miles if you're lucky, 50 in the winter, it flipped at some point, and this is the other factor, is when Tesla came on and it became apparent that they were actually going to start making cars in volume and they became a real threat. I think that's when the industry started actually trying to make compelling, EVs. I mean, Ford's talked about this, GM's talked about, these aren't compliance cars. They were really trying to make great products, and they have in many cases. I just think now it's, they're seeing that they got ahead of consumers. I mean, yes, regulatory's kind of the stick. The carrot has always been the valuation of Tesla, but lost in the shuffle's been like where the consumer's at with this. And so once we blew through those early adopters, it's going to be a lot harder. And then it's going to come down to price. You got to get the cost out of the battery. I mean, it's a long slog at this point. But I think that the formula for it making sense, and I do think in most states you're going to save a lot of money if you just charge at home, if you can almost exclusively charge at home. So the formula is someone who's got a big nice garage that you can put a 220 panel in, and it's probably a third car that you don't have to take on road trips. You charge it overnight every night. You figure out what the best time is to charge to get the best rates. You run around town dropping kids off at practice. You almost never have to charge in public. I mean, for a lot of people, you can pull that off, and but many more people, that doesn't work. You live in an apartment, so there is a subset of the population that can save a lot of money, and they get to avoid the gas station, and they can feel good about the climate factor and all that. So, I think for a lot of people it still works, and surveys show there's a lot of people who are still really interested in EVs. So, we shouldn't write the obit just yet.
That's right. In fact, that's what it shows. There's a lot of interest in it, but the price isn't right. Mm-hmm. And they want to see more EVs around so that there's a comfort factor that, okay, it's safe for me to go get one.
Yeah. And then when they buy this hybrid, they'll say, damn, I'll never need to buy a EV.
Well, I think in both cases, you rarely talk to people who will go back. And a Tesla owner, someone who owns an EV, I'm sure there's a few that come back and say, no, I don't want to see this thing ever again. But almost exclusively, the people I've talked to, they look at internal combustion as like this quaint idea, like whale oil lamps or something, right? And I think hybrid's the same thing. I mean, I bought a hybrid car a year and a half ago. I don't think just because there are so many good options, I'd be hard pressed to not buy another hybrid unless it's something, some Corvette, or, well, I guess they do have a hybrid Corvette, but something real specific that didn't have a hybrid option. I mean, there's a hybrid option in almost every category you would look at, and they're a little more fun to drive. You get more power, you save a lot on gas. So I think the hybrid thing's going to stick. And I mean, both hybrid and EV, I think have a really good business case and use case.
So, you mentioned before that when Ford made the announcement that they're going to be providing hybrids for their whole showroom, do you think General Motors is being sufficiently aggressive on pivoting to hybrids?
I think it's early days based on what they've said. I mean, they've said that they're going to do some plug-in hybrids in response to the consumer demand not materializing as they expected. We don't know what that looks like. We don't know if that's just a few Cadillacs or if there's a real effort underway to spread it across the lineup. I think there probably needs to be, based on what we've seen. I mean, the EPA regulations that came out a few weeks ago, the government initially, when they floated those, didn't even really factor in plug-in hybrids to the equation. Now the government's saying, well, we think you need to get to X by 2032. I think it's roughly 2/3 of the fleet being EVs, but that can look a number of different ways. And it could be 52 or 54% full EVs, and then 16, 18, 20% plug-in hybrids. So I think that even the government's kind of looking at this going, we need to kind of meet the consumer where they are. And so I do think you're going to see strategically the companies moving in that direction. I think GM pretty much has to at this point.
Yeah, you mentioned that Corvette. I mean, remember we drove that for NACTOY last year.
I was blown away by that car.
And it's just like, I'd forgotten about that car. I mean, you never hear anything about it.
Right. But just to follow up on what you said too, I was talking to a GM powertrain exec last year, and he said, look, we're developing hybrids for the South American market. So if top management decides we need to pivot, he says, we've got the technology to do it. Now, how quickly can they get that in the showroom? That's the real question.
Yeah.
Just because you have it on the shelf is one thing. Getting it in the showroom in volume is another.
Charlie, when you guys are, hearing things about like what the government wants by 2032, I mean, does any of the data that you're looking at indicate to you that we're going to get there?
I mean, it's hard to see. It seems to me that some things have to change. For example, to really get the kind of penetration levels we want, the adoption rates of these electrics, we might have to do something with gasoline prices being so low that we may need some kind of gasoline tax. You look at Europe, that's had very aggressive adoption rates of EVs. Well, it's because underlying gas prices are $8-9 a gallon. That makes a compelling argument too. You can save a lot of money driving an EV. I don't know that it's the same argument here when gasoline.
Who's going to propose a gasoline
And I
tax?
say
it's political suicide.
Political suicide. So I think it's going to be very challenging to get that without something to move consumers towards EVs, given all of the risks that still exist there. Certainly, I think that you're right. They do work for some people. You have a garage, but a whole bunch of people don't have any of those qualifications and aren't going to have that option. So I do think it's going to be very challenging to get to where the government's trying to push us at without more government intervention, which none of us wants.
Mm-hmm.
But what do you do? So I think in the U.S., the federal government could back off if it's clear in 3 years or 5 years that consumers just aren't cooperating, right? And surely a change in administration, all bets are off. We saw it last time with the Trump administration. They could come in and on day one at least roll back CAFE and EPA. If you're a GM or Ford, what do you do with the fact? I don't think you can play chicken with the EU regulators or with China, right? So, you kind of run the risk of being on an island selling big pickups and SUVs when the rest of the world is kind of passing you by. So strategically, I just don't know, how you play that. You can't just walk away from the EV thing. And I don't think they're saying they're going to, but when you're trying to calibrate the timing of these big capital investments, it gets really tricky to push it out too far when every day in the headlines, the BYD's making a pickup truck. Like, what do you do with that if you're Mary Barr?
Well, remember, we're looking at it in 2024 lenses. And by 2027, we're going to have next generation platforms, next generation batteries. We're going to see far more public charging stations than there are right now. We're going to see the cost of the batteries continue to drop. They do every year. The industry gets smarter and better at how to make these things. And I'm not talking about massive drops, but the cost will come down. And so that's why I'm thinking 2027, the EV segment's going to look a whole lot better than it does now. But to get to what the administration's talking 62% BEV and PHEV by 2032, I don't see that happening at all.
Yeah.
And I'm a proponent of these things, and I don't see it happening.
See, and I think the problem, John, is that, okay, you use 2027, and so we've heard from General Motors their plans that they're going to have in 2025, which have now been put off, and we heard Ford's plans have been put off. I think that we're seeing a whole lot of punting, and 2027 is going to be punted to 2029, and then what I mean? It's just
right.
and if they're becoming more conscientious of how much this is costing them vis-a-vis the number of people that you're seeing buying them, I think there's going to be great reticence on their behalf to really plow a lot, more money into this. And then if, the $7,500 goes away, if the credits they're getting for battery packs goes away, then what's the consumer demand look like?
Well, and I mean, you look at it from their global footprint, both GM and Ford are a lot smaller globally than they were before. So the one market that they sell a lot in is here. You're the laggard of the world in terms of EV adoption. So where do you build the scale is the question. I mean, if you're just taking the slow approach in North America and everywhere else in the world is going gangbusters on EVs, and there has been some slowdown in Europe too. I mean, it's a global thing, but I just think that the Ford and GM, just how tied they are to the North American market, it's going to be hard for them to build scale when the consumer's not cooperating as much as they needed them to.
And that's what it is. It's a race to scale, and if you look at, I've talked about this before, Tesla did not turn a profit until it started selling 50,000 Model 3s every quarter, i.e. 200,000 a year. That to me is the magic number. You got to sell 200,000 a year of a given model, maybe a couple of different top hats on the same chassis, same platform, but that's the only thing that's going to get you there.
Yeah.
Now that's mid-market. If you're selling more expensive cars, the volume requirement comes down. But if you're selling cheaper ones, the volume requirement has got to go up.
I think they're in a real bind. You're exactly right. We risk being just a regional market and don't have products that our companies can manufacture to sell globally, and we certainly don't want to be in that position.
Well, look, 5 years ago, 2019, I said, and I'm just pulling a number out of the air, by the year 2030, 1 out of 3 vehicles sold in the U.S. will be electric, 33%. And I'm still sticking to that number. I don't see any reason to change my mind.
But Charlie, to that point of not being able to sell elsewhere, I mean, F-150s are not sold in vast numbers anywhere else but here, and Ford's doing okay with them. Suburbans, with few exceptions to governments around the world, are not sold elsewhere in vast numbers, and GM's doing gangbusters with that. I mean, so it's almost as though the mindset is like, the ones we build, we make money on, and if nobody else wants them, we don't care.
Well, and that may be. I mean, it may be they just decide we're just going to make pickup trucks and we're going to specialize in that, or big SUVs and not mess with all the other product segments. I just think generally the industry was always, you had to have a big product portfolio. You got to have products for the consumer at every stage in life. But maybe that for these Detroit 3, maybe they need to get away from that and specialize much more so than they even have already. If they're going to decide we're not going to try to compete globally in all these different products.
Well, think about it. When they had those full lineups, they were oligopolies, right? It was GM, Ford, and Chrysler, and the imports were inky-dinky little parts of nothing. Now that's completely changed.
Yeah.
And Gary and I were talking about this before the show. GM, Ford, and Chrysler cannot build, let's call them affordable cars, cheap cars, in the United States with UAW labor. They can't do it. All of their affordable products come from Mexico, China, or South Korea. That's it. And so this is a real dilemma for them. If all they're going to do is rely on full-size pickups and SUVs, boy, what if America wakes up one day and goes, yeah, I don't need anything that big anymore. Not small, but nothing that, I mean, it's over for them totally. Yeah. So they put themselves in a very strategically tenable position. They got to be able to compete. And to me, this is why what Tesla's doing with the unboxed assembly process, we'll learn what Ford's doing with its Skunk Works in California, what Tesla or Toyota's doing with its BEV factory. You got to design cost out. You got to design it out of the product. You got to design it out of the process. Because if you don't do that, you're not going to survive.
Yeah.
And you just look at, saying about abandoning large segments, Toyota and Honda are doing good, and you've got Camry, Accord, Civic, Corolla. Go into a Ford store, you can't find anything like that, right?
Yeah, no.
And they just basically said, we can't do it. Yet in Europe, they continue to build cars. So
somewhat. I mean, they're getting out of it there too.
Yeah.
But I mean, same with Stellantis. Stellantis doesn't make any sedans, unless you look at the 300, which is going away, and the Charger as a replacement. But look, they're all looking at segments in terms of where can we make money or not. And if we can't make money, we're out of that segment. I mean, why are we taking good shareholder money to provide zero return? In fact, just burn it all up. So they can't do that.
Bonfire out back.
That's right. Exactly.
Given that whole backdrop, I think that the big question hanging over the industry right now that I hear is like, what happens if BYD does build that plant in Mexico and there isn't some protectionist measure that is put in place, and those very credible, well-made cars come pouring in from the Mexican border? I mean, they're going to be buyers lining up, especially given what you just said about the fact that there's nothing at the bottom end of the lineups of a lot of the OEMs now. So, I mean, I think that that's the big risk that, the industry and politicians on both sides are starting to try to figure out, how we protect against that in the future of Chinese-made EVs coming in from Mexico.
Yeah, but the biggest threat is to Toyota, Honda, Nissan, and Hyundai, Kia, because those cheap Chinese cars are going. We just talked about the
Yeah.
Detroit Three have largely abandoned that segment.
They're their
But
competitors.
but to your point, when you see BYD saying we're going to make a PHEV pickup, then it's like yowza. That threatens the Detroit Three now.
Yeah.
I think it is a long-term threat. I think it is a threat.
Right.
And we're talking years.
Right.
It's happening now in Europe, right?
Mm-hmm.
I think I saw where BYD's first shipments of cars coming into some German port, like it was like national news. That was like they're coming, and so I mean, China-made EVs are being sold right now in Europe, and I think the Germans are, there's a bit of panic going on about what this means for the market.
Yeah, we'll see how the registration numbers come in, but I was looking at it recently. The Geely Group was number 5 or 6 in Europe in EV sales, and the MG was number 4 by model. And you go down the list, and there's a bunch of Chinese names on there too. So yeah, and they're only just getting going. They're just going to get stronger and stronger. And this is why the Europeans are saying, hey, wait a minute, maybe we better do something like the Americans and try to stop this from happening.
Charlie, do you see any sensitivity in the market to brands from China, or do you think that's transparent to people?
I mean, I think they'll initially have a tough go, just like the Koreans had, just like the Japanese had back in the day. But I think with some good marketing, they can conquer sort of any preconceived notions Americans might have. I do remember looking back, 10, 15 years ago when China first started making automobiles, and we started to think, oh, maybe they could be a threat. And there was this video on YouTube of a crash test dummy in a Chinese vehicle hitting a wall, and you just see the steering column just puncture through the airbag and into the head of the crash test dummy. And that just always sort of set in my mind of that's a Chinese vehicle. And I think for a lot of people, that's just sort of the general impression that you're going to be risking your life on these things. But if they can conquer that, I think low cost will get you a long way if you can come up with a product that people feel fairly comfortable with.
Yeah, no, look, the question's been answered, when the Japanese first came in, and they did great. And then I remember when Honda built its assembly plant in Ohio, and people said, well, will people buy Japanese cars made in America? We're all hyper aware of all this stuff. The general public, they don't know. They don't care. If it looks good, the price is right, and it appeals to them, they'll buy it.
Mm-hmm. Well, the Buick Envision is doing very well, and that's made in China. And Ford's new Nautilus, or Lincoln's new Nautilus, is being made in China, and it should do well. I mean, it's an amazing car.
Volvo Polestar, they just had record sales.
Mm-hmm.
So I think there'll be a hue and cry about it, and especially in union strong areas, there will be a big hue and cry, and the rest of the country will just go on as it always has.
Yeah.
So it doesn't sound good for the MC3.
Probably not. But I will say, public opinion, as we can see these days, can be manipulated and swayed, and politicians may target these Chinese vehicles, and
they will,
and they become persona non grata. Like, you don't want to be seen in one of these things.
Yeah. No, they already will. And look at the attacks on the battery plants that are taking place, at least in Michigan. It's interesting with all this investment in EVs going into a red state like Georgia. You're not hearing any objection to that at all. And so
I think that was the explicit involvement of CATL on the Ford plant, right? This is the reason why you saw some of that backlash.
Right.
I think some of that's going to get normalized. And to your point on the red states, a lot of people think that if a Trump administration comes in, all the IRA spending is just going to get frozen and blown up. And I don't think that can happen, because most of the investment is going into red states. I mean, between Rivian, which they pressed the pause button on, but Hyundai, those 2 plants in Georgia alone, you're talking $15 billion going into Georgia. Are those congressmen from those states, are they going to stop that? I don't think so.
I agree with you in the sense that, look, if a Trump administration comes in and pulls the rug out on all this EV stuff, you're going to financially cripple the Detroit Three for sure, and everybody else that's made all these investments in the United States. I mean, it's going to be a financial bloodbath. It already is tough. You pull that out, man, they're in deep trouble.
Yeah, the battery production tax credits alone, I mean, I think a lot of companies sort of bake that into some of those decisions about how much money they're going to get based on the number of cells they're going to build in those plants. That would wreck the economics pretty quick, I think, if that stuff went away. But I think that's going to be harder to do than to roll back the EPA regulations, which I think is relatively straightforward, and it's been done in recent history. So.
And I said, you don't have to roll back the regs. All you got to do is roll back the date by which they have to be met.
Right.
So if you gave the industry 2 more design cycles to meet all that stuff, boy, would it be a whole lot easier. Yeah. And you don't have to change the regs. You still got to meet this, but instead of 2032, maybe it's 2038 or 2040.
Yeah.
So, well, look, we got to wrap this up, but Mike, great having you back on the show. Charlie, you too. This has been a fantastic discussion. And Gary, you and I will just keep on doing these
next
things.
week.
Yeah.
AutoLine After Hours is brought to you by Bridgestone Tires, solutions for your journey.